And we are live. It's a new week. Let's see what happens. Again, thank you everyone for following me on Twitter and on YouTube. And always do your own due diligence, as always. This is what I see and how I interpret the markets. Today we're going to look at gold, silver, platinum, oil, all the commodities. And then I'll do a video on the ETFs for like gold and silver, uranium, and so on, just after this one. So be sure to check both of them. And let's head straight into the charts. I have like 20, 15, 20 charts that we can look at here. First off, silver. What is going on with silver? Not much, to be honest. And still, there are some some things we can look at here. For the past 1 year, we have been in one long upsloping channel here. Mostly would say it's bearish. Yes, it is until we break out above 26, but still, right now we are in this blue flag right here, as you can see. Excuse me. Okay. What I think will happen is that we will break out of this falling wedge here to the upside, of course. Will it be a breakdown here, then boom, then we have the three lows, or will it just be a straight up only an ABC correction here and we break? I think tomorrow will tell, or is it Wednesday where we have CPI numbers that will tell the difference. But for now, it certainly is setting up for a move down. So keep that in mind that we could visit just below 22, and then we need to hold here. So that's silver for now. Gold is a bit further into the stage of the wedge. Right now we are at the end. And in my view, we have the 1925 right here. Excuse me, 1935 right here, the neckline of this bad boy right here. And right now we're just waiting. If we can break above, then the wedge breakout is confirmed. And then we will, I think we'll go to and attack the all-time highs and possibly break out from that point. If the CPI numbers comes in not in favor for gold and silver, then obviously we will, I think, we'll break down here and have a trip way lower. So these are the scenarios. So until you get above the blue neckline, there is nothing bullish that you can celebrate. Again, getting below, let's add this one in here to follow this blue line here, and we are bearish again. It's quite easy to set up that view. Gold to silver ratio, however, is looking very bearish here in a wedge right now at the left shoulder, as you know. And I think this one actually looks like it will break down here at some point, depending again. I think we'll be right here on Wednesday, and then we will see what happens. I think if we break down, this will be the final go, the fourth touch of this one here. And then it will break. Gold will break out into all-time highs in my view, and then we will have a big run for gold and silver over the summer and into autumn. That's quite nice to finally be at that point where we can possibly have a big move. It doesn't happen often. It's been a grind, I will say that. Let's make these golden. Again, quite similar. A falling wedge here, but we broke down here. And right now you can see here a smaller time frame inverted head and shoulders. We have broken out today, very bullish, confirming this inverted head and shoulders. And now we need to get back into the wedge, and then we need to pop here. So once we break above the golden here at around, let's call it 940, 950, in that range, give or take, then we have a very bullish setup here, getting a lot of people caught short right there. Okay. Bitcoin, still nothing is happening, so don't look at the chart every day. The levels are 31.5 and 29, excuse me, 0.5K. That's the range for this flag. Breakdown, bearish, upside, bullish. That's it, basically. Nothing more to add to Bitcoin here. It could go either way, but it favors the upside since we are sitting at, we're flagging just below a pivot flag here, or the triangle high here on the flag. So Bitcoin looks bullish. It really does. Okay, here we have the dollar index, the Dixie. We broke down last Friday with I can't remember, it was non-farm payrolls. Yeah, it was non-farm payroll that didn't hit what they thought would be the numbers. So we're breaking down from this here, very bearish for the dollar. I think we're going down here, and I think the further we get down here, again, that will be when gold finally breaks above the necklines and so on. So it looks very bearish for now for the dollar. Also look at the candles. Last Friday's candle was very red, and today was just a continuation, closing at the bottoms. Again, the CPI numbers on Wednesday and Thursday will decide the breakdown or the breakout here above this one here. So I don't think much will happen tomorrow, to be honest. The 10-year still, we broke out last week from this major bull flag, which is half a year old, more or less, right? One big bull flag you can see here sitting on top. So again, we're going in for the famous retest, and we will see what happens there. I wouldn't be surprised actually if the 10-year would be at 3.85 or 6 when the CPI numbers will get released, and depending on the data, right, it will do like this or have a massive big false breakout and then continue lower. That's just how I see it. It's setting up for now. This is the Dutch net gas. Still. For some reason, the lines here are gone. Doesn't matter. We can just have one line here, so it's quite easy. To me, again, breakout, we are retesting now. As you can see, we are trying to retest here. So as long as this bottom holds at 23.5, it's all good. It's very bullish. So you can see it right there. So we're retesting now. So hopefully we will curl up again. But we probably need to base out a bit here for like at least a month more or two before we can have some sort of upside. But it looks good for now. Again, as long as this one holds, you can see where it comes from. It's right here. It's right here. Major resistance support, excuse me. So that's why this one needs to hold. The natural gas futures, I need to go on the linear scale here just to show you what I see. And I think we're having a similar bottom right here. Also, it is kind of a massive breakout, right? And then a big retest. It's kind of messy, I know, but that's still what it is. So if this hold and then we can have a massive spike here, you can actually see it quite similar to what happened back in the early 2000s. Big breakout, right? Big retest right here. Big retest, and then we actually spiked 3 times. 3 spikes, right? That's just that. Excuse me, my eyes are itching. It's late here. So if we get similar move, that means that this is the bottom, right? And we will get some very spiky prices here for the gas with 3 highs again. So natural gas could become insanely pricey if this fractal right here holds up. Insanely pricey. So what are the copper doing? Still doing nothing, basically. We had a false breakdown here, boom, and now we're back into the squeeze. So as long as we're in the squeeze, we don't do anything because it's just a fight between the bulls and the bears. When we get to the apex here, we either break up to the upside or the downside. It's quite simple to chart, really. The Baltic dry, I need to go to the log scale here. Oh, well, the log scale. My bad. What I'm seeing here for the Baltic dry actually is we have the 3 spikes low. You can see here, 3 spikes lower, and now we had a test here again at the big resistance, the golden here, and what I think could be forming, maybe not, is actually an inverted head and shoulders here. Again, we need to confirm it and have break the blue neckline, of course, but still, this could be one big inverted head and shoulders breaking out of the wedge. Also 3 lower lows. There's a lot of check marks that you can check here in the box for a possible major turnaround right here for the Baltic Dry Index. Let's follow it, but it won't happen until for the next 2 months or so, 1 month, 2 months, late August. Oil, good old oil. Actually, look at where we are. We are at a massive resistance. The golden trend line here, boom. Let's go to the normal candles. As you can see, we tagged it. Oh, sorry guys, it's messy. We tagged the golden trend line more or less, and now we have a rejection here. So we need to break the golden trend line before any more upside. And again, I think I had the line on before the 75, excuse me. The 75 is still a big level to get through. So we are at a big level right here for oil. We will see how it plays out. But we have broken out of this bad boy. That's quite nice, but still it's a short term, and now we are getting into the longer term trend lines, which always has more validation of value or weighting, whatever you want to call it. So yeah, short term good, long term a lot of resistance that we need to get through. Fine. I want to show you Palladium. No one is talking about Palladium, and I understand why, obviously, but what I'm seeing is actually, again, quite similar. Let's remove that one just to clear it up a bit. The first low, second low, and third low in a bullish wedge. Yes. And we had a big intraday reversal today, as you can see here. One big hammer. Jesus Christ. One big hammer candle here. So if we can get above this pivot low over here at 1260, then I think we'll have a good shot at blasting through and get into the 1400 range, and possibly having the fourth touch again to the upper golden. As you can see, 1, 2, 3. So a fourth touch here, and then we'll break out. In my view, that will break out. And oh, it's quite messy today. I'm sorry, guys. Anyways, and what could be actually, if this plays out, I wouldn't be surprised. This is the left shoulder, the head, and then we will break out some sort of retracement, and then we have the right shoulder. Just remember this one whenever we get into the winter, because this is, I think it's quite possible that this is what we will see. But anyways, we have to wait and see. So Palladium could be very bullish very quickly if we break out to the upside here into August. The nickel, I need to go to Heiken Nashi because they are very messy. Still at the long-term support coming across. We're attacking it here today or last week as well. So let's see what happens. Sorry, I'm sorry, it's so messy. I want to show you this one. We have again quite similar. We have a channel here, and for now we have a 1, 2, 3, 4, 5, 3 lower lows again on a shorter time frame, but within a perfect channel. So this to me, again, we're bouncing up from the longer term support. It's like 10 years old, 15 years old. Could actually be the bottom right here for nickel. Again, we need to hold the 17 handle, 1700 handle for Palladium. But yeah, I wouldn't be surprised to have some sort of a go here actually over the next during July, August. So Palladium looking quite nice. Could be looking right nice. Let me rephrase it here, but still the setup is awesome. Again, we have the lead in here, right? The big double bottom. So if this is a big double bottom pattern, then let's do like this roughly. Then in December, I don't know, but December 2023, we could actually be at the highs again if this one has symmetry. So we could be at 2,500. It's a big call, I know, but let's see. Let's see. I want to show you wheat. Wheat again. We have a wedge here. One low, second low, third low, and breakout retest. So this could be a bottoming pattern here. Also see the support all the way across. So I think wheat, the most likely scenario for wheat is to start to curl higher here, actually. So yeah, it's not good for food prices. Last one, the SPX divided by the HUY, the gold bucks index, I think it's called. I think we're still in the right shoulder, and you can see the rally that we have had here, this one here, all the way up. I think we'll break down, and then we'll have the final outperformance of finally have the golden index to outperform the SPX. Again, this is a bearish wedge, as you can see right here, and then hopefully we can break down here, take out this high here, and then it's all the way down here in my view. So that's how I see it. Okay, I hope you liked it, and sorry for the mumbling. It's very late here and I'm very tired, but still I have one more video to record about the ETFs, uranium, GDXJ, and so on. I hope you join me and have a great evening. If not, Cheers, guys.